Well, today we look at activity-based costing. In the earlier class, we had discussed absorption costing, and we said what absorption costing tries to do is to seek a fair means of spreading the overheads. Now, if we remember what we said with absorption costing, we said that in absorption costing, we never have an issue. So let's assume that we have our cost unit here. So just for us to have a pictorial representation and see exactly what we are trying to do. So our cost unit is an item that we want to measure cost for. So a particular product or service that we want to measure the cost for. Now our direct material cost, our direct labor costs are directly attributable to this cost unit. Our issue is with overheads. The overheads, we can't directly transfer our overheads to the cost unit. There's no way to directly measure, because by definition, overheads are those costs that cannot be directly attributable to the cost unit. So for example, if we have rent and we are producing different kinds of products, then the rental cost cannot be directly attributed to this cost unit. You can't say, how much of the rent are we giving to one cost unit? It's not a direct relationship. So what we do with absorption costing is to say, we first of all analyze our overheads, separate them, and then collect them in what we call a cost center. So in our earlier studies, we will say a cost center is a collecting place for the overhead costs until they are further analyzed. So we'll do an analysis of our overheads by the process of what we called allocation. That's in absorption costing now. We'd have allocation. And for some other overheads, we'd have what we call apportionment. Now it is after we have allocated and apportioned. So for the direct ones, for the overheads that are directly attributable to the cost center. So for example, let's assume that we are producing our favorite example. Let's assume we are producing tables and chairs. So let's assume an organization is producing tables and chairs. Now the overheads, they will have overheads for the table department, while they will have overheads that will be collected in the chair cost center. So you have a cost center here too. And then we can also transfer, so we'll allocate those ones. So a supervisor of the table department will be allocated to the table cost center. A supervisor that is only responsible for the chair department will be allocated to the chair cost center. On the other hand, rent affects both tables, and there can be different specifications of tables, different specifications of chairs. Now that one will now be apportioned. So we'll have apportionment to the table cost center. So we might, our rental cost now, maybe we'll do 60-40, for example. I'm just using a hypothetical here. So 60% of the rent will go to the table cost center, while 40% will go to the chair cost center. That will now be apportionment. And then we will now need to, when we finally got in that, we said we'll use the process of absorption to absorb the cost from the cost center to the cost unit using our overhead absorption rate. Now, this was the process of absorption costing. That's what we do with absorption costing. Now, on the other hand, when we look at activity-based costing, now activity-based costing is not too dissimilar from absorption costing, but with activity-based costing, our primary objective is to seek to accurately, so our word here is accuracy. So absorption activity-based costing seeks to accurately reflect the overhead costs in our cost unit. So we'll do something that's not too dissimilar from what we did on top. So we have overheads and we have our cost unit. Now, so we'll do, like we said, not too dissimilar. And what we're trying to do is to reflect this overhead cost. Now, what activity-based costing, the fundamental argument of activity-based costing is that it is the support overheads that are incurred in production or providing a service that account for a significant amount of the costs that are incurred in producing a product. So those support overheads are what we are trying to find a means of reflecting in the cost unit. So while in absorption costing, we used a cost center, we're going to use what we call a cost pool. In activity-based costing. So in activity-based costing, we're trying to reflect those support overheads, which we say are a major part of the cost, into the cost unit using a cost pool. So here we're going to accurately find a means of allocating the costs to the cost pool. And then we're going to reflect this costs that have been collected in the cost pool into the cost unit using what we call a cost driver rate. So some important things we are going to mention here are the fact that we say that it is cost drivers that drive these support overheads. It's cost drivers that drive the support overheads and make these support overheads to be incurred. So the amount of overheads that we have, these support overheads, are driven by our cost driver. So a cost driver is essentially an activity that drives the cost. Now, when we talk about support overheads, we can look at a few examples of this support overhead. So things like setup. When we are manufacturing, the cost of setting up will be an important cost that would make our total cost of producing a unit. So if we're setting up 3 times for a particular product, that will be more expensive, all other things being equal, to another product that is set up only once for production. Other things will be things like inspections. If we're carrying out 5 inspections on a particular product, then that product's inspection cost will be much more higher than one that we're carrying out only 2 inspections on. So all these kind of overheads, and there are a number of other things that we can consider, all these overheads will be the overheads that determine how much costs will be allocated ultimately to this cost unit. Now, before we move on, there are 2 main reasons why these support overheads have become very important in our discussion. First of all is that in modern times compared to the past, the amount of support overheads have become very significant. Now, in those days, you will see that most of your costs in manufacturing a product will either be material cost or labor cost. So in the past, you will see that more than 90% of your cost will be on direct material and direct labor costs. So it meant that because the overheads were small in proportion to the total cost in a cost unit, then those overheads we didn't need, and the level of accuracy that was needed was not very significant. On the other hand, today, because the overhead costs can amount for more than 70% of your total cost of production, in some cases more than 90% of your total cost of production, it means that because the overheads have become a larger amount of the costs that are incurred in production, the need to accurately reflect this cost has become significant. So first of all, because of the size of overhead relative to other costs of production, then the need for accuracy that is given by activity-based costing has become important. The second reason that we look at is that in the old days, compared to recently, that the number of products that were produced by a particular entity were usually very few. So you have 2 or 3 different variants of a particular product. I used to give an example that when you are growing up, for example, if a company was producing, say, detergent, for example, then you will see one in packet and one in sachet, and the packet will just be one standard size, while the sachet will, I don't even know that you had sachets. You just have just 2 or 3 different variants of this. But today, most entities will be producing different kinds of products, maybe greater than 10 of a particular product, different varieties of that product. So what you're seeing is that as a result of this number of varieties, the need to accurately reflect each individual one has become more significant. So first of all, because of the size of the total value of the overheads being much more significant in modern manufacture compared to the past, and because of the number of products lines that will usually be in the modern production manufacturing, you will see that there's very many variants of a particular product compared to the past. Now, because of these 2 main reasons, it means that there's a need to accurately reflect the overheads that will be incurred in the cost unit. Okay, now we'll look at a few things. Okay, so the other thing we'll look at is to implement activity-based costing. I just mentioned this generally. Now let's specifically look at the steps that would be incurred in implementing activity-based costing. Now, the first thing to do is that the company should identify the major support overheads. We mentioned a few in our discussion now, but we can extend on this. So things like setup, things like inspection, things like maybe material handling, all of these are examples of support overheads or support activities that would incur overheads. So the need for material handling has become, I think that was a question we did towards the tail end of the last class. There's something we mentioned about, what was that again? With throughput accounting, we're talking about how much material handling will be required for throughput compared to traditional. So for things like just in time, where you have to constantly have that relationship with your supplier and constantly get material or get supplies from that supplier, because you're not holding anything in inventory. Now, the logic to this is that in modern manufacturing, because there's a significant amount of overheads, you would have things like material handling costs as a significant amount of the total cost that is incurred in carrying out production. So what we're doing, like we said with activity-based costing, is we want to identify what these support overheads are. Then we want to find sensible means, not sensible now, but accurate means of reflecting this overhead in the cost unit. And what I mentioned earlier was to do this, we have to find what is the cost driver? What are the activities that are driving the cost of this support overheads? That's all the work of activity-based costing. At least theoretically, our work will be, how do we identify our support overheads, and how do we find those activities that are driving those support overheads? So something like setup. We talk about setup costs now, but instead of referring to it as that, then we might be considering other things that will give us a more total understanding of this. Now, if we have a machine setup now, then machine setup costs will be all the costs that are incurred in setting up the machine. Now, that machine setup cost, our number of setups for each individual, maybe if we're producing in batches, for example, now, for every batch that we're producing, so say we're doing a bakery, or we had a bakery and that bakery had maybe a batch of 20 that are being produced at the same time. So every time we want to produce one of that batch, then we will need to set up for that batch. Now, if we compare this with maybe some other product where we will need to set up 3 different times for us to produce that product, then we'll say that the product that has only one setup necessary will be cheaper in terms of its setup cost compared to a product that has 3 different setups to be carried out before the final product is achieved. So all of these kind of issues would reflect in the total cost that we will be giving to that particular product by the end, to get what its total cost will be. Now, going back to the steps in implementing activity-based costing, first of all, we'll have to identify those support overheads. The next thing we'll do is to allocate the costs into the cost pool. And we've looked at our cost pool here. So we'll allocate our costs into our cost pool. Our cost pool will be essentially where we'll collect the cost originally, and then we'll now transfer those costs from the cost pool to the cost unit. So once we've collected the cost, then we'll now say, how much of this cost from this cost pool will we be giving to the cost unit? And to arrive at this, we'll use what we call the cost driver rate. Now, if we remember from earlier studies, what is our overhead absorption rate? What's the formula for overhead absorption rate? All right, so our overhead absorption rate, our formula is our budgeted overhead, like you rightly said, divided by our budgeted level of activity. So that's how we transfer our overhead from the cost center to the cost unit using the overhead absorption rate. Now, what we'll do, okay, so let's say this, what we'll do with, so this is absorption costing compared to activity-based costing. With activity-based costing, we use the cost driver rate. And our cost driver rate using activity-based costing will be our budgeted overhead divided by our budgeted level of activity. So what's the difference? Now, while with absorption costing, our level of activity will generally be a blanket hours. So we generally use hours, either labor hours or machine hours, as our level of activity that we use in absorbing our overhead. With activity-based costing, our level of activity will be separate. There'll be 2 types of, and this is really, really where the math comes into play. This is where, this is easy to say now. It becomes clearer when you start working. And it is something that you need to pay attention to, because that's where the confusion comes here, especially with the computation. That with activity-based costing, our level of activity would be either hours based and so look almost exactly like how we'll do our overhead absorption rate, or will be specific activity based. I like to say this in a particular way. So we'll see that while the budgeted overhead will be the budgeted overhead for each particular activity. So first of all, like we said with activity-based costing, first of all, we want to distinguish between the different activities, the support activities that are driving our overhead. Please, it is also important for us to see a picture here that whether you're using ABC or you're using absorption costing, that your direct material and direct labor cost will be exactly the same. It will be, these ones are directly attributable. So we don't have any problem with the direct cost. The direct cost never ever bother us. The direct cost will be directly related to, so direct, how did I write this? Sorry. So whether absorption costing or activity-based costing, your direct material cost, your direct labor cost will be directly related. So we don't have a problem with that. Our problem is with overheads and how we treat overheads depending on which one we're using. Whether we're using absorption costing, which while it is fair or while it seeks to be fair, it is not accurate. And why it is not accurate is very, very down to this part of our discussion, which is that with with absorption costing, the overhead absorption rate uses hours generally as the level of activity. So we're going to use whether this overhead is hours driven, whether it is driven by your machine or labor hours, or it is not, we're still going to use hours as our level of activity. On the other hand, with activity-based costing, with ABC, we're going to specify, or we're going to distinguish between those activities that are hours driven, so that are time driven, and those activities that are driven by a specific activity. So for example, inspections or inspection costs will be driven by number of inspections. Now, the amount of time spent on machining, or the number of machine hours or the number of labor hours will have very little to do with the number of inspections. The number of inspections will be depending on the kind of quality we want to achieve. If we want very high quality product, then we'll have more inspections than a product that has not a very high quality need. So the number of inspections will be what drives our inspection cost, for example. And what I want you to see is that this inspection costs have very little to do with our number of hours. So while absorption costing will just blanket all your overheads and use a blanket overhead absorption rate using either labor hours or machine hours, our cost driver rate with respect to ABC would distinguish between those activities that are hours based, and so we'll use hours as the basis for absorbing them, and those activities that are specific, and so we'll use that specific activity as the basis for arriving at our cost driver rate. Okay. Okay, maybe I think we have this very, very summarized in the note. So I think we look through the note and do a question and then do other questions. This will now help us to start bringing, okay, one very general one. And then there's a technical article on this. So by the time we go through all of this, it should help us to be able to get clarity on activity-based costing. So let's go to the note and see. And discuss absorption costing vis-a-vis activity-based costing. What's this one? I remember doing this question in the last class. All right, so activity-based costing, we say ABC is based on the understanding that it is an organization support activities to manufacturing or the provision of services that drives costs. So it is the support activities that are driving the costs that an organization is incurring in achieving its product. So what you are saying ultimately is that if activity-based costing is similar in concept to absorption costing, then what we want to say is, remember we said that absorption costing, what absorption costing seeks to do is to transfer the total production cost to the cost unit. So at the end of the day, the cost unit should have the total production cost. So both the direct costs and the overhead costs that are incurred should all be transferred to the cost unit. And like we said, because this overhead transfer to the cost unit is not a direct relationship, then it means that we need to do the whole processing of this. Now, as we walk through this, we'll see how we'll do this in practice or computationally. Now, ABC is seen as an upgrade to traditional absorption costing. Whilst absorption costing seeks to fairly reflect overhead costs in a product unit, ABC seeks to accurately, so the difference is the accuracy that ABC is seeking compared to the fairness that absorption costing is seeking. Now, support activities such as machine setup, we mentioned a few, inspections, deliveries, material handling, form a bulk of the cost associated with production. Now, ABC has two particular, or is important for two main reasons. First of all, compared to manufacturing in the old days, modern manufacturing requires a significant amount of support activities. And so in recent times, the cost of support activities has become a major percentage of the total cost of a product. So we'll see that while direct labor will typically be around 60 to 80% of conversion costs in old manufacturing, it is now not unusual to see direct costs representing less than 5%, and then the support representing a bulk, 90+% of the total cost. So that's one of the major reasons, because overhead costs have become significant. We've talked about this earlier on. And then the second one is because where production was based on a few varieties, companies produced a relatively few product lines which used similar proportions of overheads. The need to get the exact overheads to be reflected in the product was not much of an issue. However, in current manufacture, many companies have a lot of product lines which have varying support requirements, and so there's more need to focus on ensuring accuracy in assigning overheads to product units. Now, the reduction in information processing costs in recent times has meant that it is easier for organizations to adopt ABC principles to reflect to better effect without necessarily undergoing huge challenges involved with ABC complexities. Now, one of the things we'll see is that activity-based costing is the administrative cost of activity-based costing in being able to break down what we said, in being able to break down this different level of, or these different activities that will be trying to find out, we're trying to say, what is the activity that is driving this particular cost? One of the issues we're going to see with ABC is that the fact that it is very difficult in practice to be able to isolate what activity is driving a particular cost. So many cases we'll find out that we're not able to practically find out what the activity is that is driving that cost. And so sometimes we'll say, ABC is not helping us to do anything special. It's just helping us. The cost, see, please remember this, that the overhead cost in total is the same, whether you use overhead absorption, whether you use absorption costing or the cost is the same. Is the fact that ABC is much more complex than absorption costing. And so the extra cost we are incurring on the accuracy that we get from ABC might not be justified, particularly if, because of the difficulty in identifying activities, we're not able to practically identify these activities, then the extra cost you've incurred on activity-based costing is no longer justified. There's no reason to do that. Now, some of this we've already seen before. Now, steps in implementing ABC. First of all, identify the organization's major support activities to production. The overheads are distinguished based on the activities that drive the cost of these overheads. So that's the first step. We'll identify the major support activities. Then step 2 will be costs are allocated and apportioned and are collected in cost pools. Remember, we use cost pools as compared to cost centers. So cost pools for ABC, cost centers for absorption costing. Step 3 will be to identify the factors that determine the size of the cost of an activity. This is referred to as cost drivers. So we identify our cost drivers. A cost driver is a factor that has the most influence on the cost of an activity. This could either be volume driven, and if we go back to our distinction between these, so it could be either volume driven. This is hour based. Hour based is also referred to as volume driven. Or specific activity driven. All right, now step 4, for each cost pool, calculate the cost driver rate and then reflect the relevant overhead cost to the product unit. So that's our steps in implementing activity-based costing. Now, we have said this before. Now, let's compare them. Now, with absorption costing, we focus on fairly absorbing overhead costs, while with ABC, we focus on accurately absorbing overhead costs. With absorption costing, we use a basis of apportionment, while with ABC, we use cost drivers for apportioning costs. For absorption costing, costs are collected for further analysis in a cost center, while we use cost pools for ABC. And overheads are absorbed using the overhead absorption rate for absorption costing, while for ABC, we use the cost driver rate. Now, if we use an example and then the basis of absorption is usually hours. We said this before, whether labor or machine hours will be our basis of absorption for absorption costing, while for overheads for ABC, the overheads are absorbed depending on whether they are volume related, in which case we'll use the same thing we used for absorption costing, or they relate to a specific activity, in which case we would do something separate. And similar to absorption costing, the 3 main uses of ABC, something we should remember, are for inventory valuation. So for the value of the inventory, we'll put in our financial statements that we do in financial reporting. For pricing decisions, so if we can accurately get the correct cost of a product, then we'll know how much we are marking up on that cost. So how much should we put as profit on that cost for us to be able to get our price that will be used, that would sell the product at. And then to establish profitability of different products will mean, basically, when we look at the different products that we have, we want to know, for example, if a company is selling 10 different products and you're seeing that some of them are profitable while some of them are not as profitable, then a company can decide that we want to change our approach and look at the more profitable products and focus entirely on them, and maybe cease production of the less profitable ones. Now, if you have accurately reflected the cost, if we know what exactly the cost of a unit is and how much we are selling it for, then we can know which products are more profitable, and hence determine which products we should stop producing and which products we should focus more on. Now, when we use absorption costing might make mistakes on how much the total cost of that product is because it's not doing it accurately. Now, if it's not doing it accurately, it means that we might not exactly know which of the products is really profitable if we actually wanted to know what the total cost. The question we're going to look at will give us an insight into how absorption costing versus ABC works. The important things for us to remember are some of the things we've noted on our whiteboard, which are our overhead absorption rate we can calculate. We have done this in earlier studies, that's before you started this class. Our cost driver rate, on the other hand, we can also calculate. So we see how this cost driver rate, if we use this example, then all I would require us to do is to ask our question so that clarity can be given and we can get an understanding of this. So let's look at that question. How am I able to? Okay, so we want to use, while your exam questions will not come as detailed as this, the way ABC is tested, ABC will only be tested in part A or section A or section B of the exam, but this will help us to see a full question, and then maybe we can now start. I want us to be able to use this as our plug to think about any other question we're doing. Now the question says, calculate the full cost per unit for products A, B, and C under traditional absorption costing using direct labor hours as the basis of apportionment. That's our required here. Then number B says, calculate the full cost per unit for each product using activity-based costing. And then using your calculation from A and B above, explain how activity-based costing may help Gadget Co. improve the profitability of each product. All right, we'll come to this. So what we want to do is to, first of all, calculate, we have for product A, B, and C. So use traditional absorption costing, and then same for A, B, and C, we'll use our activity-based costing. So let's read the question and see whether we can make sense out of this. Now, the Gadget Co. produces 3 products, A, B, and C, all made from the same material. Until now, it has used traditional absorption costing to allocate overheads to its products. The company is now considering an activity-based costing system in the hope that it will improve profitability. Information for the 3 products for the last year is as follows. So they've given us production and sales volume. They've given us selling price per unit, raw material usage per unit. So they've given us the raw material usage per unit. That's usage in kilograms now. Remember, I want to get the cost. We want to get the full cost. So they've given us the raw material usage per unit. They've given us direct labor hours per unit. So the number of hours we are using. They've given us our machine hours per unit. So we have labor hours per unit. We have machine hours per unit. What did they say we should absorb based on? Okay, so they say we should use direct labor hours. Now they've given us machine hours per unit. Now, number of production runs per annum. Now, once you start seeing per annum, this is in total terms. Number of purchase orders per annum. Number of deliveries to retailers per annum. Now, he said the price of raw materials remained constant throughout the year at 1.2 per kilogram. Similarly, the direct labor cost for the whole workforce was 1480 per hour. The annual overhead costs were as follows. So they've given us machine setup cost. Now, one of the first things we will need to do is to identify our cost driver when we're using ABC. So if we have, now essentially we have four or five now, 4 different cost drivers. So our number of production runs, number of purchase orders, number of deliveries, machine hours per unit, or is it labor hours per unit? All of these are potential cost drivers. So machine setup cost, what will be the cost driver for machine setup cost?
Can you hear me?
You said what?
I said the number of deliveries.
Yeah, obviously the, the number of deliveries for delivery costs, procurement costs, the number of purchase orders. And we get a purchase order for procurement. Machine running, if machine is running, then our machine hours will now determine what the number of our machine running cost will be, because as the machine is running, that's when we're incurring costs. So the number of machine hours will be our cost driver for machine running. And then machine setup is where the challenge is. Machine setup, we set it up. We set the machine up for us to have our production runs. So our production runs will be our cost driver for our machine setup. So we set up and then we have our production runs. Now, the similarities and differences between ABC and absorption costing, you see that the total overheads, our total overhead, this figure is correct. So our total overhead is 195,270. So that's what we're going to use to absorb our, we'll use this as the basis for our overhead absorption rate. Now let's see how to work this. Is there anything we've omitted now? So we should calculate our full cost. So this, I think similarly, direct labor cost for the workforce. So they've given us for material cost is 1.2 per kg. And what did we have? We had 2 kilograms for A, 3 for B, and 4 for C. While we had our labor costs for the workforce as a whole was 1480 per hour. What was our hours per unit? Direct labor hours per unit was 0.1, 0.15, and 0.2. So we can easily get our direct material costs per unit and direct labor costs per unit from the information given to us here. Okay. So now I want to show you, while, like I said, this is section A or B, where we're using a section C style example. Is an old example, but it's quite useful because I feel like if we go and just do the ones that are in our kit today, we might not have seen the full picture of how ABC works. So let's do this now. Okay, I think we already opened one for, yes, this was what we used for throughput. So we can use this same one. All right, so one of the first things to do will be, we have to structure this answer in the right way. So let's expand this, expand E, expand G. Okay, so we have product A, product B, and product C. Have we given enough space for this? So, all right, so we start with our direct material cost per unit, which will be equal to our, what did we have again? So we'll have to be going back and forth on this. Okay, our direct material cost per unit was what? So we have our direct raw material usage multiplied by our price per kg. So our raw material usage in kg multiplied by the price will give us our cost per unit. So the first one is 2 multiplied by 1.2, right? So we move through that. So this one will be, you can always click on the formula on the box to check how you did the computation. So this one is, what was it, 1.2, right?
Yes, sir.
Multiplied by 2. Then for B is 1.2 multiplied by, was 3, right?
Yes, sir.
And then the last one was 1.2 multiplied by 4. So we have our direct material cost. Now, what are we doing? This is absorption costing. So that's our direct material cost per unit. Then we do our direct labor cost per unit now. So our direct labor cost per unit, 14.8, right?
Yes.
Multiplied by 0.1. Then still the same 14.8 multiplied by, was that 0.15 or 0.2?
0.15.
0.15. And then finally 14.8 multiplied by
0.2.
0.2. Okay, so we've gotten that. Now our overhead cost, we can go and do the working on the side. So the overhead, our overhead cost per unit, we can do a working, we just call that work 1, and come and do the working on the side. Where we want to put these workings now? Okay, so our total overhead is how much? 195. I can't remember the number again. 195, 270. That's the total of all of them. We can add them up. Okay, so we can add them up to confirm. 195, 270. And the important thing is when you're looking at this, that you even know where you got the figures from. And then So that's our total overhead. Okay, so let's know what we're doing. Work one should be work one, we should call this our overhead absorption rate. So our total overhead is this. Then our total level of activity, what did they say we should use as our level of activity? Labor hours,
Labor hours. Yes.
right? So we're going
Yes.
to do for A, B, and C. So for A, now we need to, so our labor hours for A is 0.1 per unit. And how many units do we have for A? We have 15,000. Then for B, 0.15, that's labor hours, right? Yeah,
Yes.
0.15. And we have 12,000 units. And then for C, we have 0.2 and we have 18,000 units. Okay. So A is 0.1 multiplied by, what did we say again? 12,000?
No, 15.
15,000 plus 0.15 multiplied by, was that 12?
Yes.
12,000 plus, what was that 0.2
0.2.
multiplied by
18,000.
10,000. That's giving us 6.9. Does that look right? Okay. Okay, so our overhead absorption rate now will be equal to our budgeted overhead divided by our budgeted level of activity, which will be equal to that 195,270 divided by 6,900. 269 feels one kind. So 28.3. So our OAR is equal to 28.3. Now, we'll now do our, so overhead per unit now. So for A, it will be, that's our overhead absorption rate, that's 28.3 multiplied by, how many labor hours do we need for A? We're absorbing based on labor hours, so 0.1. Then for B, it will still be the same 28.3 multiplied by 0.15. And for C, it will be 28.3 multiplied by 0.2. Okay, so those are our figures, and we can now copy those figures into, so we had our working already. So for this, for that, and finally that. So here we've gotten our, so from here now, we can get our total cost per unit, which will be direct labor plus direct. So that will be, so we can sum our direct material plus direct labor plus overhead. So that gives us this. And then we can get that figure for the other two. So we can get our figures for each of them here. So that's our total cost per unit. And the absorption costing one is straightforward. Now let's look at activity-based costing now. So activity-based costing. So what's the first thing we do with activity-based costing from what we've discussed? Let's make this bold. What's our work now? So for activity-based costing now, we want to find out what our activity-based cost will be and paint the picture that we're going to use again. Now, the first thing to do is to remember that our direct material and direct labor cost will be exactly the same thing. So we can copy this and do exactly the same thing for that. I don't know if we want to specify A, B, and C, that's fine. So our direct material cost will be the same for A, for B, and for C. Our direct labor cost will be the same for A, for B, and for C. It's our overheads that will be a different way that we're going to treat this. So our overheads now, we start with, what did we have there? Now, please, there's something I want you to see here, which is our machine setup cost is driven by the number of times we will need to, once we set up, then our cost driver will be the number of production runs, because we need to set up before we can run, before we can have a production run. So that is driven by number of production runs. Our machine running cost is driven by machine hours. So our machine running cost is similar in style to how we did our overhead absorption rate, because we are using machine, in overhead absorption rate, we used labor hours. Here we are using machine hours to run. Now, our machine setup cost, that is production runs, is in total terms. Now I want you to see, this is the important thing in doing ABC, that some are going to be in total terms, the ones that are specific activity driven are going to be in total terms, while the ones that are based on hours, whether machine hours or labor hours, will be the volume driven ones. Those ones will be similar to how you did absorption costing. So what I want us to do, it doesn't make very much difference, but I won't mind shifting, doing the machine running cost. Okay, we can just do them separately, but I want you to be able to see that difference now. So we'll start with our machine setup costs, and we go and do a working for that. And what's the figure itself? To be going back and forth here would be stressful. So 26,550. Okay, so let's see how we do this now. So what's the first one we said? Machine setup cost. This space is not, I don't like this space. Okay, so let's do our second working here. So we say machine setup cost. Now, first thing we'll do is answer what's our cost driver. I said our cost driver was number of setups, number of production runs, okay, so that's our cost driver. Now, the next thing to do is what's our cost driver rate? Our cost driver rate is still same budgeted overhead. Divided by budgeted level of activity. All right, so what's our overhead now? What did you say, 26,550, Abby?
Yes, sir.
And then the budgeted level of activity. Now that's where our work is now. Will be for A, B, and C. Our level of activities, since we are using production runs, it will be 16 plus 12 plus 8. That's 36. So our cost driver rate now will be equal to 26,550 divided by 36. So we have that. Now that's our cost driver rate. So this, now when you state this properly, it will give you a guide. So this is $737.5 per, what's that now? Per production run.
Okay.
Per annum. So for every production run, we are incurring 737.5. That's one. So the next thing we're going to do now is to say, what's the number of units per production run? So how many units do we have in each production run? So for A, how many units are A?
16.
No, the number of units was 15,000, right?
Yes.
So 15,000, yeah, divided by 60. While for B, it was 12,000 divided by 12, right?
Yes.
Because I'm saying the 12 here. And then for C, it was 18,000 divided by 8. Okay.
Okay.
Anyway. All right, so we have the number of units per production run. So this is for every production run. Now, how many production runs do we have for A?
16.
So number of production runs per annum, 16 for A. Number of units per production run is what we've gotten. Okay, so where are we now? So how much are we giving to? So our cost per unit now. So cost per unit will now be, so for A, will be equal to our cost driver rate is this per production run per annum. And then the number of units per production run is this. So we'd have 737.5. And there are faster ways of doing this. Divided by 937.5. Then for B, that same 737.5 divided by
1000.
1. And then for C, 737.5 divided by 2250. Okay. So let's make that a few decimal places. Okay. All right, so we have those figures. So we'll have, what are our cost drivers? What are our activities now? So we have machine setup. Abi, that's the one we're doing now.
Yes, sir.
What's the next one? Machine running, I think. So we had machine running. Then was it delivery first?
Yeah, delivery.
Okay, so delivery cost. And what was the last one?
Procurement.
Procurement. Okay, so we've gotten our machine setup cost. Can make it 2 decimals, doesn't make any difference. So it's a similar thing we're going to do for delivery and procurement. It's machine running that is different. So let's do the machine running first. Let's do the machine running first, because the delivery and procurement is going to be similar to what we did there. The difference, and this is what I really want us to go back and look at until we can get this one, because this is, let me tell you the truth. I don't know how to say this thing that would, but this is one of the most difficult things you're going to do in the whole of, in my own book, to me, one of the most difficult things you're going to do in the whole of performance management. That's why, while it is the first chapter, I don't like to do it until, I would like to push it as far as possible, because it's kind of discouraging. But if you sit down and look at this and look at it again, you'll see that if you're actually paying attention, and potentially if you have a video too, then it will help you a lot. There are faster ways of doing this, like I said, and you can develop your own faster ways. Not, but there's a logic to this one if you follow it like this. So anyhow you want to do it is fine. Now, what's our cost driver here? Machine running, say what's driving machine running? Number of machine hours. So here, machine hours. So our machine hours is our cost driver. Then our cost driver rate now.
$66,400.
Okay, so that's our, we didn't write that. Okay, so our budgeted overhead. So our overhead now, yeah? Was what?
66,400.
400. Okay, so 400. That's
Yes.
our budgeted overhead. Now, our budgeted level of activity. Our budgeted level of activity now, this one is volume driven. So it will be, we're saying machine hours. So we'll do something similar to what we did. Let me show you what I'm saying. We'll do something similar to here. But now it's machine hours rather than labor hours that is driving it. So what are our machine hours for A, B, and C?
0.5.
0.5. What was the other one? Cancel this thing.
0.7.
I can't see that. Okay, so 0.5, 0.7, and 0.9, right?
Yes.
So that's what we're going to use here too. So we have budgeted level of activity. So 0.5 times how many units for A? So we should have got it comfortable with the 12,000. Then 0.7 multiplied by, was it 12,000? Was
No,
15?
the first thing.
The first one was 15, Abby.
Yes, 15,000.
So 15 here. Times 12,000 plus 9 times 18,000.
Yes.
Okay. So we can copy this. And we didn't need to do, we could have just done this thing directly now. Okay, the figure is not that messy. So our cost driver rate now will be equal to 66,400 divided by 32,100. If our computation is right. I want that in as few decimal places as possible. Okay, so that's our cost driver rate. What's next now? This one's different from the other one. So this one will follow your ABC. This is what I want you to see a picture of. This one will be similar to how you did your absorption costing, your overhead absorption rate. Now you've got to your overhead absorption, sorry, you've got to your cost driver rate. Now your overhead per unit now. So our overhead or cost per unit. How did we call it? I want us to maintain similar terminology so that we call this cost per unit. We'll call this one overhead per unit. So let's call it overhead cost per unit and call this one to overhead cost per unit so that we know we're talking about the same thing. It's just two different ways of doing this, which is the hardest thing for you to remember in ABC. Just remember that there's the ones that are volume driven, which will be calculated the way we calculated work 2, while there's the one that is specific activity driven, which will be calculated the way we calculated work 2. So work 3 is volume driven, work 2 is specific activity driven. Once you can do that, there's nothing more to do. This is really the crux of your work. So our overhead cost per unit. So for A, will be equal to, similar to what we did, was 2.0 0,
07.
07. So let's just call it 07. So for us to be sure of that, let's reduce the decimal places so that we don't start looking for where the figure came from. So this would be 0.27 multiplied by, what's the number of machine hours? This is 0.5, right?
Mm.
It's machine hours, not labor hours, so be careful.
We're going to okay.
What were you saying?
No, I was thinking we are going to divide it.
No, because this one's like, so like that's what I said. Just identify the two of them separately. Do you get what I'm saying?
Yes, sir.
Okay, so B now will be equal to so 2.07 multiplied by 0.7, and C will be equal to 2.07 multiplied by 0.9. Okay, so C all right, so we've gotten our values for machine running now. So we can copy these ones now. So we have the figure here. And then the rest of it is, if you get, once one has practiced, exposed to this, and you get a hang of it, the rest of it is very, very mundane. Exactly, we're almost doing exactly the same things. So what I can do now is to reduce and because of our constraint, I can copy this thing and go and just make the adjustment for it, for the other two. So the next one we said was what? Delivery cost, Abi? So I'm just going to adjust these deliveries. I'm going to actually adjust this machine setup to delivery so that we'll reduce the time we're spending. So our delivery cost, we'll just be adjusting that now. So our delivery cost now, our cost driver is number of deliveries, all right? Is that how they called it?
Yes.
The number of deliveries.
Number of deliveries to retailers.
So we can just ignore the retailers part of it. We're not saying anything different. So number of deliveries to retail. Well, no, delivery was 5th now. Was the last one.
What was the
Procurement,
last one?
I hope it won't cause any problem for us. Let's not go and pick the wrong figures. Okay, so we're doing deliveries first. Or should we just do our procurement before deliveries?
So anyone works.
Okay, so why not? All right, so our cost, number of deliveries, so our budgeted overhead over budgeted level of activity. Now, what's our budget overhead for deliveries?
54,320.
54320.
Yes.
So we have that. Now, our budgeted level of activity. What is our budgeted level of activity for deliveries? So 48, 30, and
48,
60.
30, and 60.
All right. So we have 48 plus 30 plus 62, right?
Yes, sir.
We can get our total there. So 140. So our cost driver rate now will now be our three. Let's remove all of this. So what did we say? So 54320 divided by 140. Okay. So that's 388 per delivery per annum. So per delivery per annum, and then the number of units in for each delivery. So the number of units per delivery. Okay. So for A now, we have 15,000 divided by, how many is that? 48, right?
Yes.
And then for B, we have the same 12,000 divided by 30.
Yes, sir.
And then for C, we have 18,000 divided by 62. Okay. I wish we had more structure to this. It would have just been changing these figures for us. Then we know that it's when we go and review this, it will not be as bad as it looks. Okay. Why is this figure so ugly? Is this correct? 18,000 is the last one. 18,000 really? Number of, yes, it is.
Yes, it's 8,000.
Okay, that's the figure they've given us now. Okay. All right, so we're almost there. Then our overhead cost per unit now will now be different from this. So let's clean all of this now. So this one will be 388 divided by 312.5. So cool. See that false. Okay, then the second one to will be
388
okay. The second one, 388
divided by 400.
right?
Yes.
And then the last one, 380
3 divided by 290.
290.
0.3.
Okay. All right, so we have that. And then finally, so we can recopy this one again. I've chopped into other people's time now. So procurement cost now, right? Is that where we
Yes,
are?
sir.
The procurement.
Yes.
All right, so just by doing exactly the same thing. So this is not intelligent. The most important thing is to settle down and pay attention to how we did the two different ways we did it. So this one is number of purchase orders, I think. Number of purchase orders.
Mm.
All right, so our number of purchase orders. So what's our budgeted overhead?
48,000.
How much?
48,000.
48,000. So 48,000. Then our budgeted level of activity, different. What did we have there?
24.
24 plus
28.
28
28.
plus
Then 42.
42. All right. All right, so we have 94 here. So this will now be our cost driver rate will now be 48,000. 94. Good. Okay, so we can reduce how messy this one is. So 510.64. And then we now come to our number of units per, we converted this one to delivery, right? So per number of units per order, per purchase order. Okay. So 15,000, that's still 15,000, Abi?
Yes.
Divided by 24. The next one is 12,000 divided by 28.
28.
And then the last one is 18,000 divided by 42. Okay. All right. One more step. This one would have actually helped us gain speed if it were a part C question in the exam. Okay, so we have these two figures are exactly the same. Yeah, okay. The reason for it. This is one. This is 1.5 times this, while this is 1.5 times this, while this one too is 1.5 times this. So two of them kind of cancel out. Playing with numbers. Okay, so A now is what's that now? 510.64 divided by
625.
625. Next one. So now same 510.64 divided by this one 428.
And 57.
And then the last one 510.64 divided by same thing 428.57.
Yeah.
Okay.
Okay.
All right, so we're done. So next we'll analyze why we have the figures we have. So let's just put them in. So this is delivery. We'll start with delivery. Okay, so delivery here. Then the next one is, so let's see the difference between the costs under the two regimes. Okay, well, this is where we are delivery. Okay. And this is here, right? And then for procurement, finally. So procurement, this one. Then procurement for this other one is this. And then the final procurement was this. Okay. So then we can now come and do our total cost. So just like so for ABC now, our total cost per unit will be equal to, so we can sum all of them. So I can copy and paste it. So that's our total cost per unit. So there's a difference. Can we see that? There's a difference. When we're using absorption costing, our total cost per unit was 6.7 for A. But when we're accurately using our total cost per unit is 7.76. Now, what's our selling price? Let me show you something. What's our selling price for A?
7.50.
So 7.5. Then for B?
$12.
12.
Yes.
And for C?
13.
13. All right, so remind me that we should talk about this. So you'll see that if we're using absorption costing, we say 6.71. So we're selling at 7.5. That would have seemed like a good thing. But when we saw that this is actually 7.76, so we're actually selling at a loss. Can you see that? We're actually selling at a loss at 7.5 because the actual costing before, and our costing was telling them that your cost 6.71. So if you're selling at 7.5, you're making a profit. However, actually their accurate cost is 7.76, which means they're actually making a loss if they're selling at 7.5. Do you see that?
Yes, sir.
Okay, so we'll discuss this from the next class. All right, see you.
Okay, thank you, sir.
All right, bye.